Hi all, Bret from Experience World here. Comprehensive credit reporting, also known as positive credit reporting, is a mandatory credit reporting regime which has been enforced since July 1. The intent of the overhaul was to equip lenders with more information about yourself and your spending habits, so they can make a more informed decision at application time on your ability to repay a loan. Under the old credit reporting system, it really only contained some basic elements. It outlined the number of credit inquiries and the time frame in which you've made them, paid and unpaid defaults, judgments, and bankruptcies. In the new world, apart from the information that was already captured, in addition to that, there will be two main categories in which it will report on. The first is repayment history. Repayment history will outline repayments for all credit accounts such as home loans, personal loans, and credit cards over the past 2 years. If you've made a payment or a minimum payment where required, and lastly, whether you've made a payment and if it was on time or not. A common question we get is, will repayment history on things such as utility bills or phone bills be counted? The answer in this case is no, as these guys are not licensed credit providers. The second segment is what we call consumer credit data, which outlines the following: the type of credit account you have opened, if the account is open or closed, and if you've closed it, what was the date that was done, name of the credit provider, and the current limit of the credit account. Initially, the requirement is for institutions to have 50% of this data available from July 1, which is already passed, with full data to be provided by the end of the year. So what's the impact? Well, firstly, we should start to see lenders rely more and more on credit histories when making their credit decisions. In the future as well, we could see them rely on credit reports more heavily when setting things like interest rates and credit conditions on the loan. For business, we should start to see an increase of the smaller lenders. Now with an increase of data available, those smaller lenders will now be able to make more informed credit decisions, which in turn should drive competition across the board. So what can you do to prepare for the change? Well, these are our tips. Well, the first thing you can do is register for electronic statements. Just like there's a high rate of utility defaults from people moving address, avoid the same with your loans by having your statements online or emailed to you. Set up direct debits or at least an automatic minimum repayment where possible. Only apply for appropriate amounts of credit that you need. If you're using balance transfers, ensure you're closing down your old cards. Call out for help if you need. If you're going to miss a repayment or be late, reach out to your bank or credit provider and try to discuss an arrangement first prior to missing the repayment. Lastly, check your report. Make sure your information is correct and everything is up to date. If you had any questions or concerns around comprehensive credit reporting and how this may impact you, please feel free to reach out to us directly to see how we might be able to help. Keep up to date with all the changes in the world of banking, lending, and financial planning by clicking the link in our bio to subscribe to our mailing list or subscribe to our YouTube channel on the link below.